Bitcoin has become very popular in the past few years, but it has also sparked debates on many platforms all over the world. People who are into investing are rushing to buy Bitcoin on different platforms. Lately, there has been a lot of controversy regarding Bitcoin, and it has something to do with the private meetings between billionaires and Bitcoin miners. What were they up to, and what was discussed during the closed-door meeting? In this video, we're going to talk about the worries that people have regarding the private meetings and talk about Bitcoin too. But before we get into the video, don't forget to leave a like and subscribe to the channel with notifications on so you don't miss any of the new videos we post. What's gonna happen to Bitcoin after all 21 million are mined? Bitcoin can be likened to digital gold, and just like gold, it cannot be created arbitrarily. They just can't pull it out of thin air. It must be extracted. Gold is extracted from the earth using physical strength. On the other hand, Bitcoin must be mined using computational means. Bitcoin has a finite supply, and there will only be 21 million Bitcoins produced, nothing more. These Bitcoins are introduced to the Bitcoin supply at a fixed rate of a single block every 10 minutes. The number of Bitcoins released in the aforementioned blocks is reduced by 50% every 4 years. Once miners have unlocked the total number of Bitcoins, there will be no more supply. However, there is a possibility that the protocol will be changed to allow a larger supply. There is an ongoing debate on what will happen when Bitcoin reaches its limits. To date, approximately 18.5 Bitcoins have been mined, so that means there's less than 3 million that have yet to be introduced into circulation. It's also important to note that some people have lost their private keys or have passed away without leaving instructions to anybody regarding their private keys. In actuality, there could be millions less Bitcoins out there. The finite supply of Bitcoin has a huge impact on miners. It seems that the group of individuals directly affected by the limited supply of Bitcoin are the Bitcoin miners. Some people claim that the miners will be forced away from the block rewards they receive for the work done once the supply reaches its limits. Miners will likely continue to participate actively and competitively even when the last Bitcoin is mined. The reason is because every Bitcoin transaction has a fee attached to it. Today, these fees represent a few hundreds of dollars per block, but it could potentially increase up to thousands of dollars per block, especially as the number of transactions increases and the price of Bitcoin rises. It will ultimately become like a closed economy where transaction fees will be assessed, much like taxes. It is projected that it will take more than 100 years before the Bitcoin network mines its very last token. As of 2140 approaches, miners will likely spend years receiving rewards that are only small portions of the final Bitcoin to be mined. It's a must to keep in mind that the Bitcoin network will change significantly in between. There will be new protocols, new methods, and a few other new factors. But Bitcoin mining uses more electricity annually than whole countries. Bitcoin mining is power hungry, and it involves the use of computer calculations to verify instruction. According to Cambridge researchers, it consumes around 121.36 terawatt-hours a year, and this value is unlikely to fall even if the value of the currency takes a nosedive. The currency's value skyrocketed to $48,000 recently, following Tesla's announcement that the company purchased $1.5 billion and planned to accept it as payment in the near future. However, the rising prices offers miners even more incentive for miners to run more and more machines. As the price increases, energy consumption will also skyrocket. If Bitcoin were a country, it would be in the top 30 users of energy worldwide. Bitcoin mining involves the use of specialized and powerful computers. These computers are connected to cryptocurrency networks. The computers verify transactions made by people who receive and/or send Bitcoin. The process of mining involves solving puzzles to verify a currency's movements. They provide a hurdle to ensure that there are no fraudulent edits made to transactions. Miners are rewarded with small amounts of Bitcoin in what most people liken to a lottery. To increase profits, people frequently connect large numbers of miners to the network. Some even have an entire warehouse filled with them. This uses plenty of electricity because the computers work non-stop to complete the puzzles. By using an average electricity price per kilowatt hour and factoring in the energy demands of the network, miners can then predict how much electricity is consumed. Closed-door meeting between billionaires and Bitcoin miners have caused skepticism in investors. There was a lot of uproar when it was revealed that Elon Musk of Tesla and MicroStrategy CEO Michael Saylor revealed that they have created what they called the Bitcoin Mining Council. Some supporters were in favor of the idea, but others were very skeptical. They say that the council brings back memories of the notorious agreements called the Hong Kong Agreement and the New York Agreement. According to Saylor, miners such as Core Scientific, Hive Blockchain, Riot Blockchain, and BlockCap have joined the initiative. Some investors saw the closed-door meeting as a shady dealing because similar closed-door meetings are notorious for bad outcomes. The Hong Kong Agreement happened in 2016 and was even called Bitcoin Roundtable Consensus. The specific agreement said that signatories agreed that the Bitcoin protocol would increase the block size to 2 megabytes, with the total size no larger than 4 megabytes. A lot of people signed the agreement, but a few of them changed their positions later on. A few signatures from individuals who are against proposed any block size increase include Samson Mao, Peter Todd, Luke Dasher, Adam Back, and Matt Corallo. The agreement never came to fruition and led to another notorious meeting called the New York Agreement. Initiated by Digital Currency Group, the New York Agreement was also a controversial meeting. It was dubbed the Bitcoin Scaling Agreement at Consensus 2017. Once again, a 2 megabyte block size increase was proposed and agreed upon by a majority of industry participants from more than 50 companies in over 20 countries. The only part of the agreement that made it through was the implementation of SegWit, or segregated witness. The 2 megabyte size increase never made it through. Even in the midst of conspiracy theories, some people believe that the next logical step is the Bitcoin Mining Council. Some investors don't appreciate the interference of the billionaires with miners and addressing carbon neutrality, and even went as far as labeling the meeting as nothing but a publicity stunt to address environmental concerns. There are even speculations that Tesla will soon be announcing a Tesla Bitcoin mining operation. Members of the Bitcoin Mining Council look forward to promoting the concept of an environmentally friendly Bitcoin mining operation. They say that sustainability has always been a significant issue, and the newly formed council aims to foster a sectoral shift towards renewable energy. Why is Bitcoin so popular these days? One of the many reasons why Bitcoin is so popular is that there is no government involved. There is also no central bank that acts as a regulatory authority. As such, the cryptocurrency remains stable even if a country experiences turmoil, and for some investors, this is good news because it helps protect their wealth. They can convert fiat money into Bitcoin and hold on to it until the traditional currency stabilizes. Bitcoin is easy to use and very straightforward. Nowadays, many websites accept cryptocurrency as a payment method. This is becoming more prevalent as more people refrain from dealing using cold hard cash. Crypto credit cards are also making an appearance and may become widespread soon. More people now understand Bitcoin and more businesses are accepting it. Bitcoin is fast becoming an option for completing transactions because digital wallets allow consumers to access their coins easily. Bitcoin enables consumers to protect their identity as well as their money when using Bitcoin for payment. You don't divulge any of your personal information. The only thing that is shared is your digital wallet address, and your wallet is further protected by a private key. Unless someone gets their hands on the private key, nobody will be able to steal your Bitcoin. That's what makes Bitcoin safer than fiat money. The use of Bitcoin involves low transaction fees compared to other payment methods like banks. As such, more people prefer using Bitcoin when sending money across borders. The low transaction fees helps people save money when buying things online or paying for services. People see Bitcoin as the future of digital currency. Bitcoin is innovative, and for some people, this is how it got their attention. They think that it will eventually displace fiat money or any government-issued and related currency. Bitcoin also uses blockchain technology, which experts believe has the potential to transform various social and economic sectors. Obtaining Bitcoin is not difficult. All you need to do is go to a reputable crypto exchange to purchase or trade. A few years ago, people needed to mine Bitcoin to get it, but that's not necessary nowadays. Bitcoin mining is a complex process which involves solving complex computer or math problems. In order to mine, you also need to have special skills, possess powerful computers, and of course, spend money on electricity to mine Bitcoin. However, things have changed, and now individuals can purchase and sell Bitcoin. The popularity of Bitcoin will continue to rise as more merchants accept it as a payment method. More people are not realizing the potential. More people are not realizing the potential of this particular currency. Furthermore, the media is always on the lookout for events that highlight Bitcoin, which continue to popularize it. That's the end of our video, folks. Will you be investing in Bitcoin anytime soon? What do you think about the private meetings between billionaires and miners? Let us know in the comments section. We will see you again in our next video.